This is chapter 5, the problem for the first one. So I wanted to talk about the break even and the contribution margin. So in this particular one, let's not worry about what they're talking about with the sales increase at this point. So basically what it's saying is that we are selling our, whatever it is we happen to be selling, at $99 per unit, and variable expenses are $69 per unit. So for example, let's just say we're a merchandiser. So we're selling bicycles. So we buy our bicycle for $69. We turn around and sell it for $99. Our fixed expenses, which are those things that don't change regardless of how many we sell. So it might be rent, it might be insurance, it might be utilities, that sort of thing. Those for the year are $835. So what happens when we sell 25,700 units? So let's go ahead and calculate that. There are a couple ways to calculate it, and I'll show you those. So let me bring my calculator over to the screen here. So what I'm going to do is I am going to take my sales price of $99 and I'm going to subtract my variable cost of $69. I'm left with $30. That's considered what's called my contribution margin. My contribution margin is what contributes to my fixed expenses. So I'm going to take my contribution margin, and that is, once those fixed expenses are paid for, that's what also contributes to my net income. So $30 for each bicycle or whatever it happens to be is going to go ahead and contribute to my fixed expenses. So I'm going to take that $30 and I'm going to multiply it by that 25,700, which is what we happen to be selling this year. So times 25,700. And that happens to be 771,000 minus our fixed expenses, which is 835,500. So we are actually at a loss of 64,500. So that's where that net loss of 64,500 comes from. So the next question is, what is the break-even point in units and what is the break-even point in dollars? So this is relatively easy to do once you have figured out the contribution margin and the contribution margin ratio. So I just want to make sure, I think I switched. I just want to make sure that the contribution margin is the same. So the problem switched a little bit. Every time I open it, it gives me a different number. But the contribution margin is still $30. And the contribution margin ratio, what I'm going to do is I'm going to take the contribution margin of $93 and, or excuse me, the sales price of $93, and I'm going to go ahead and divide that by my contribution margin. So I'm going to take the 30 divided by 93. So my contribution margin ratio is 0.323-ish, we'll say. So when I go back down to find my break even, if let's say my contribution margin first has to go towards my fixed costs, and once those fixed costs are paid for, then my contribution margin can then go to my income. Once those fixed costs are paid for, then I have broken even. Once I break even, then it can go towards my net income. So let's see what our fixed costs are here. So our fixed costs are $833,400. So of the $93 that I'm charging, 63 of that goes towards whatever I'm selling, bicycles again. So 63 of that goes towards the cost of the bikes. So that means that only 30 of it can go towards my fixed costs. So what I'm going to do is I'm going to take my fixed costs of $833,400 and I'm going to divide it by 30. So that means I have to sell 27,780 units, 27,780, in order to break even. Now to figure out how much in sales, I can multiply that by my sales price times 93. So that would be 2,583,540. Or I can take my fixed cost of $833,400 400 and divide it by my contribution margin of 0.323. And I will get approximately the same number of 2583540. So that will give me about the same number as for the break-even dollars.